This is Business Report on your digital first Pan-African News Network TS Television. I'm Usaze Isesele. We'll begin with business in Kenya. For the year ending December 2020, Family Bank posted a 22.4% growth in net profits to 1.1 billion shillings. This was made possible by increased lending regardless of the coronavirus pandemic, which affected businesses. The lender grew interest income from 2019's 7.1 billion shillings to 8.8 billion shillings in 2020 through targeted sectors in trade, manufacturing, logistics, and other important sectors as well. Chief Executive Officer Rebecca Mbithi said the loan book expanded by 11.8% year-on-year to close at 56.6 billion, dependent on their support for customers who saw through the hurdles of the pandemic. The International Monetary Fund (IMF) board will soon make a decision on Kenya's $2.4 billion loan request. Patrick Njoroge, Central Bank Governor, has said the International Monetary Fund will disburse the sum of $314 million next week as the first part of the loan request. According to the governor, the IMF board is meeting on April 2nd, and it is likely to approve Kenya's request. The money is expected as well to help reboot the country's economy after the rumble the COVID-19 pandemic has put it through. Kenya is expecting to use part of the cash to pay off some of its loans due in June 2021. And on to South Africa, the central bank has revealed that South Africa recorded foreign direct investment inflows of 16.0 billion rand, amounting to $1.07 billion in the fourth quarter. This is from outflows of 12.2 billion rand in the third quarter. Inflows in the fourth quarter were brought about by non-resident parent entities responsible for increasing equity investments and granting loans to domestic subsidiaries. For all of 2020, South Africa recorded FDI inflows of 51.1 billion rand, yet it is still down compared to 2019's inflows of 74.0 billion rand. Over to Egypt, Orascom Financial Holding announced it has teamed up with Excel to launch a new fintech company geared towards digital payments. In September 2020, the Egyptian Financial Regulatory Authority made the approval from Orascom Investment Holdings Board official. The company is intent on separating its financial services operations in order to allow shareholders to make more targeted investments. Orascom, who will own a 79.9% stake in the new fintech company, is optimistic that the partnership will set the pace for the implementation of the company's strategy to achieve financial inclusion and digital transformation of the financial sector in Egypt. The new company is intent on reaching more than 1 million customers in the medium term. There's more coming up. Business Report Africa will be right back after this short break. Welcome back, and over to Ghana. A couple of entrepreneurs in Ghana are leveraging information, communication and technology (ICT) to diversify their products in improving sales post-COVID-19. This is because the use of ICT had, according to them, enabled them expand their horizons and diversify their businesses. Chief Executive Officer of Hill Bill Company Limited, producers and manufacturers of Ghana-made shoes and belts, Mr. Bright Aferi, said he has introduced new products to help his company make more sales. He is keen on leveraging ICT to reach out to a large number of customers over a limited period. A major challenge is the costly price that comes with resorting to ICT. For them, sales declined by about 25%, but ICT helped them market their products and see new angles to expand sales globally. Ghana, through its action of securing the sum of $3 billion from an oversubscribed book value of $6 billion, has become the first sub-Saharan African sovereign to issue a Eurobond in US dollars since the onset of the COVID-19 pandemic. The money will support the budget deficit. This Eurobond issuance has placed the government with options, and the successful issuance of the 2021 Eurobond is proof of investors' renewed confidence in the Ghanaian economy and its managers. Now in Nigeria, in response to the report released by the National Bureau of Statistics revealing that states and federal debts had hit 32.92 trillion naira as of December 2020, the International Monetary Fund (IMF) made a case for serious growth-friendly fiscal adjustment among low-income countries while drawing attention to proper debt management. The IMF urged developing countries to reduce sovereign risk by improving on debt data accuracy and transparency. The MBS said the total states and Federal Capital Territory FCT domestic debt was put at 4.19 trillion naira, and the IMF cautioned LICs against mismanagement in order to avoid debt trap. The Central Bank of Nigeria, CBN, has revealed it is encouraging banks to support viable information technology firms with potential to export information communication technology-related services to countries across the world, even as it serves the needs of the local market. This interest is based on the fact that the ICT sector contributed over 47% higher than its contributions before the pandemic, which led to 17.8% to GDP growth by the end of last year. The bank is particular about leveraging ICT as a way for growth in key sectors of the economy, even as it supports SMEs, farmers, and so on. And on the final note, the International Monetary Fund has said the impact of the COVID-19 crisis will cause developing countries to record a massive drop in per capita income in 2022. This could go as high as 20%. According to Kristalina Georgieva, IMF Managing Director, the loss of income means millions of people will face destitution, hunger, and homelessness. She said more pressure could come to vulnerable emerging markets, low-income and fragile states, even as countries like Nigeria already have limited means to fight the crisis and are exposed to hard-hit sectors. In conclusion, she said, we must follow the example of the scientists by stepping up cross-border efforts, by doing whatever it takes to ramp up vaccine production, distribution, and deployment, even as policies must be tailored to country-specific needs. On that note, we end Business Report Africa. Thank you for watching. Do follow us on social media at TOS TV Network on Facebook, Instagram, and Twitter. Like and subscribe to our YouTube channel at TOS TV Network. I'm Musa Isesele. Thank you for watching.